Welcome back to Investing Talk podcast. Today we are focusing intently on one of the really interesting, maybe even terrifying microcaps in clean energy, Newhydrogen. The core question we're tackling, like always, is pretty simple. Is Newhydrogen a good time to buy right now? Before we dive into, the nitty-gritty of their technology, please do remember to subscribe, like, and comment below. And hey, if there's a specific company you want us to analyze in a future episode, just drop it in the comments.
That's the plan today. We're really dissecting this microcap clean energy developer. They're focused squarely on cracking the cost problem for green hydrogen. And let's be clear, this company is pre-revenue, so the investment case. It's classic high upside, but also very high risk. We're not just looking at the facts today. We really have to interpret what's behind those facts, weighing their pretty compelling tech moat against, frankly, a challenging financial picture and some wild near-term price forecasts.
Okay, so let's start where the excitement is, the technology itself. I mean, for a company with just a $21 million market cap to get this much buzz, they must be claiming something, well, pretty disruptive. What exactly is Newhydrogen trying to do? How does it change the game for green hydrogen?
Well, what's interesting is how they're basically rejecting the current standard. Usually, green hydrogen means electrolysis splitting water with electricity. The issue there, electrolyzers are expensive pieces of kit, and even if your electricity is clean, the whole process just eats up a ton of energy. It keeps green hydrogen costs stubbornly high.
Which is the bottleneck, right? Why we haven't seen widespread adoption yet.
Exactly. So Newhydrogen is going a different route. They're developing technology for low-cost thermochemical green hydrogen production. They're trying to sidestep that whole cost barrier.
Okay, and this specific breakthrough they talk about is Thermaloop. What does thermochemical actually mean for an investor, and why is using heat supposedly better than using, well, megawatts of power?
Right. Thermaloop is their novel method. It makes green hydrogen using just water and heat. Think solar thermal heat, or maybe even waste heat from factories. It doesn't need costly grid electricity.
Oh, okay.
And think about it. Heat is often cheaper, easier to store, maybe easier to scale than building out massive electrical infrastructure. So if they pull this off, they eliminate the need for those really capital-intensive electrolyzers. That could potentially slash the production cost of green hydrogen. Big time. This isn't just tweaking things. It's aiming for a structural fix to the cost problem.
That definitely sounds like a potential moat, assuming they can scale it up. And
Right.
Clearly the company knows the value of this IP. We saw that big milestone recently, right? August 2025, they jointly filed a patent application for Thermaloop with UC Santa Barbara.
Correct. The patent title is coupled multi-phase oxidation reduction for production of chemicals. Look, for a pre-revenue microcap, patent protection is absolutely vital. It turns an idea in a lab into something defensible, an actual asset. And the fact they brought on Austin Morales back in August specifically to push Thermaloop development forward, that shows management is actually putting resources behind commercializing this thing, not just, tinkering.
Okay, so moving from the lab towards, let's say, corporate maturity, let's look at their momentum over the last few months, say July to October 2025. Seems like management's trying to clean house a bit and maybe attract more serious investors.
Yeah, those are definitely key signals you want to look for, especially with high-risk, high-reward plays like this. You need proof management is focused on things like governance and market access.
The biggest step seems to be the uplisting to the OTCQB venture market. That happened around October 2025. CEO Steve Hill said it boosts governance, transparency. But how much does an uplisting really matter when the core business is still just R&D?
Well, it matters quite a bit, mostly for visibility. The uplisting is kind of a signal saying, hey, we're maturing. It potentially opens the door to larger, maybe more regulated investors who couldn't touch them before. It improves transparency, broadens the potential investor pool. Basically, it prepares the ground for bigger capital raises later on, which, let's be honest, they are definitely going to need.
And they also joined the Texas Hydrogen Alliance recently. Texas is pushing hard to be a major U.S. hydrogen hub. That feels pretty strategic, right, for future collaboration, infrastructure?
Absolutely. They're planting their flag right in the middle of what's probably the fastest growing hydrogen market in North America. Being in that alliance gives them better positioning for, say, pilot programs or partnerships once Thermaloop actually shows it works.
Yeah.
It's smart, building the network before the product is fully ready, kind of a preemptive move.
But, okay, all this corporate activity needs to be balanced against the financial reality. Give us the snapshot here, because this is where the speculative part really hits home.
Yeah, we have to be super clear on this. Newhydrogen is pre-revenue, period. They reported zero material revenue for the trailing 12 months. Looking at the Q2 2025 stats, their net loss for that same period, around $2.0 million. EPS is basically negative zero.
Oof. A $2 million burn rate. How does that compare to their overall
Well,
size?
their market cap is pretty small. It's $21.51 million as of October 2025, with about 717 million shares out there. That $2 million annual burn really underscores how much they depend on future funding rounds or, hitting those tech milestones fast. The current valuation, it's based almost entirely on the promise of that patent, not on any current assets or cash flow.
Okay, and this leads us to maybe the most confusing part of this whole story right now. The stock's performance, the technical charts, they look super bullish. Like, investors seem incredibly confident. But then you look at analyst forecasts for the near term, and they're predicting, well, basically a complete collapse.
Right. This is where it gets really tricky. It feels like a tug of war between maybe irrational excitement and some very cold fundamental analysis.
Let's start with the bullish side. The stock is up an insane 343.97% over the last 52 weeks. That's a huge long-term uptrend, clearly fueled by speculation in green energy.
And we see technical signals backing up that current momentum too. The stock's trading above its long-term moving average classic general buy signal. Plus, there's a 3-month max CD buy signal. That confirms the medium-term upward push.
Right. For folks maybe less familiar, that MACD signal just means the short-term price trend is pulling away strongly from the longer trend. Kind of confirms the recent optimism is, well, sticking around for now.
Exactly. And what's more, the RSI is at 34.74. That suggests the stock isn't actually overbought yet. Technically, it still has room to climb before hitting resistance levels. And kind of surprisingly for this sector, its beta is only 0.74. That implies lower price volatility compared to the overall market. Maybe it's just trading on its own news.
Okay, so technicals look great. Strong momentum, not overbought, maybe even less volatile than expected. Why on earth are analysts predicting a near total wipeout?
Well, this is the danger zone for investing purely on technicals, especially with a pre-revenue microcap. Analyst forecasts are calling for massive declines in the next few months. They expect the stock to average something like 0.00128 cents in November 2025 and 0.00386 in December.
And compared to where it's trading now, hold on, that's like a 95% downside for November and 85% for December. That's not a correction. That's basically predicting it goes back to almost nothing.
It reflects total fundamental skepticism. Analysts are looking at zero revenue, a $2 million annual loss. And they're essentially saying, look, without proof of commercial viability very soon, like in the next 3 months, this stock price is going to crash back to its intrinsic value, which right now is basically zero. And look at the range in their 30-day price targets, 0.0000022 all the way up to 0.00672. That huge range just screams uncertainty. It's like the market's pricing in a massive success, while analysts are pricing in an almost complete failure.
So the whole investment thesis really hangs on what happens, like right now. All the positive stuff, the patent, the uplisting, the Texas Alliance, it's being counteracted by these incredibly bearish near-term price forecasts that expect the bubble to pop. We really need to focus on the next steps then.
Precisely. The next 3 months are like a tightrope walk. Success totally depends on the company showing real, tangible progress on commercializing Thermaloup. Investor enthusiasm won't last forever, just based on filings and promises.
So what should people be watching for, say, between now and January 2026?
Okay, several key things. November 2025, we've got the Q3 earnings report.
Yeah.
Now, we don't expect revenue, obviously, but the discussion around cash burn and cash on hand, that's going to be under a microscope. Then in December, you have the year-end financials, but probably more importantly, you're looking for Thermaloup development updates.
Those updates. Yeah, arguably the biggest data point of the year for them. Investors need to see movement, from lab concept towards maybe pilot testing.
Yep. And then rolling into January 2026, we'll likely see updates on the patent application review. And, crucially, potential news coming out of that Texas Hydrogen Alliance. Any collaboration announcements. Market watchers will be absolutely fixated on any news about pilot projects or, the dream scenario, actual commercial partnerships. Those are the kinds of announcements that could justify that 343% surge and maybe prove the bearish analysts wrong.
Yeah, a collaboration announcement with a major energy player, especially one tied to that Texas group, that could change the narrative instantly.
Okay, let's pivot slightly. Let's talk downside versus upside. For someone considering this, a speculative investor, what are the key risks specifically tied to Newhydrogen? What has to be factored in?
Well, the sources list the usual suspects for an early-stage developer, right? Developmental delay, the tech takes longer, is harder than they thought. Commercialization risk, maybe it just never scales affordably. And the big one, the constant immediate need for cash given that $2 million annual loss. Plus, they just have a limited operating history. Forecasting is almost guesswork at this stage.
And if they do hit delays or fail to get more funding, that 95% downside prediction from the analysts suddenly looks very, very possible. Frighteningly so.
Right. But on the flip side, if they do succeed with Thermaloop, the upside is just massive. Let's explore that speculative potential. Based on market chatter, potential catalysts, keeping in mind, like you said, these are unconfirmed scenarios right now.
The biggest speculative driver is definitely landing major deals. We're talking potential strategic partnerships, maybe pilot programs with big established energy companies. Companies looking for that edge, that low-cost green hydrogen. The tech itself makes Newhydrogen an attractive target for the giants.
There's also the possibility of non-dilutive funding, right, like federal money. If they pursue and actually get government grants for clean energy, that could bridge their funding gap without hurting existing shareholders.
True. And then there's the sort of ultimate payoff for a tech developer, licensing deals. If they license the Thermaloop IP to industrial manufacturers, instead of trying to build everything themselves, they could potentially pivot into becoming a high-margin royalty company pretty quickly.
And that uplisting we talked about, the better governance, that could finally attract some serious institutional investors, giving the stock a stability it just hasn't had.
So yeah, bring it all together. Newhydrogen is absolutely at a critical point. The technology seems compelling enough to explain the speculative frenzy we've seen, but the near-term volatility is extreme. And the fundamental risk, still very, very high.
So the overall rating we're seeing is bullish, maybe a 7 out of 10, but with huge caveats.
Exactly. Has to be qualified. This is really only suitable for speculative investors, people seeking high upside exposure to potentially game-changing clean hydrogen tech, but who also have a very high tolerance for risk. You have to be prepared for big swings.
And for anyone considering putting money in, the sources kind of outline two distinct ways to think about it, two time horizons. You could play it as a short-term trade, basically betting on news around the Q3 earnings and those development updates expected in December. Or you take a much longer view, a speculative, long-term investment banking on the whole clean energy sector growing and the world needing cheap hydrogen eventually.
Right. So here's the final thought, something for you to chew on, building on everything we've discussed. If, and it's a big if Newhydrogen manages to navigate this crazy near-term volatility, if they secure the funding they need, and if Thermaloop gets licensed or adopted widely, how quickly could the commercialization of a technology like that truly reshape the competitive landscape for a company that today is only valued at $21.51 million? That huge gap between the current tiny valuation and the potential global impact. That's what makes this arguably the highest risk, but maybe also the highest reward story in clean energy right now.